So we're going to start with gold, and we are going to talk about more of the candlesticks, the liquidity, and because I kind of understand, because wisdom always asks me question anyway. So I kind of understand like there are still some confusion regarding like maybe like our direction and our target or something like this. So, and this is where I want to talk about the candlesticks because with the candlesticks, you basically can understand what the market is actually doing, right? We are going to start with gold. So there is always a reason why we start from, I mean, this is like the, so new month is going to start today anyway, right? So basically we are going to start from the monthly time frame, but usually we can start from like the weekly time frame because of continuation. But new month will start like today or tomorrow. What is it? Mm, tomorrow is what? First?
Yeah, tomorrow is the first.
Yeah,
Okay, so new month is starting tomorrow, basically, which means today when markets opens. So now what we can see right here is liquidity to the upside, liquidity to the downside. This candle is an inside bar, but also showing a bullish momentum, right? We have fair value gap here, and as well, we also have a fair value gap here. So now, something you guys need to pay attention to. Previous month range, right? This was previous month range. Before this, so this will be like a previous month if new month open now. But yeah, in previous month range, from this low to this high, we have a fair value gap right here now. Then we are going to look into this because this is going to be a previous month now as well. So we are going to look into this range if we will have a fair value gap in this range from the weekly time frame. But now, what we can see from this monthly time frame perspective, we have liquidity up and down. And of course, we also have inefficiency. So these are what we can see right now physically. But if we go down to the weekly time frame, this is when we will know if we have a fair value gap in this previous month higher, like within the previous month range. But from the weekly time frame perspective, we don't have anything like fair value gap. I mean, this is inefficiency, right? But yeah, there is no physical fair value gap than this inefficiency. So the candlesticks that we are going to talk about is basically to understand your direction, your bias. So from your direction, your bias, that is when you can go down to the daily time frame down to catch a move. So your move could base on a range or you know some structure or particular candles. It doesn't matter. But first, basically, last week I traded on Friday anyway. Throughout last week, I was kind of busy, so I traded just Friday, even if the market was kind of fluctuating, but I still traded anyway. So what you can see last week, last 2 weeks, not last week, last 2 weeks, we didn't have any meeting, but I already figured out like gold is going to buy, and of course GU is going to buy. But of course, because we didn't have meeting, so I couldn't able to like let you guys know. So the candlesticks, they tell us a lot. With the candlestick, you can be able to determine your bias and what is next, right? Now, how? When candlestick is ranging, the way they closes will determine the bias, right? This was 2 weeks ago before last week, right? What happened was this low was taken and price closed indecisively, right? price closed indecisively. We took liquidity from previous week low, but the top liquidity was still there. We didn't take the top. So, and we closed like this. We failed to close below this low. It just tells me that price needed to go higher. But how can you get in this price to go higher? You will now go down to the daily time frame to also look at the like basically the candlesticks. And of course, if we want to buy or sell, we want price in our premium or discount. We have indecisive candle, but even in this indecisive candle, if you flip this indecisive candle, you can see price was in our discount, which means we need to buy. But you cannot just buy from here. You need to go down to the daily time frame to see what you need to see. And now from the daily time frame, look at how Friday closes. This was Friday candle. Friday failed to close below this, also gave an indecisive candle, right? Now, if you flip this candle itself, you will see that price closes up, which means we are in our like premium. You cannot buy from premium. That is why you see when Monday open, price first of all sold down into what? Discount, then price bought up. This is from the weekly analysis down to daily. I mean, you can go down low for your entry and all of this. But first, you need to determine your buyers and where to take profit from. Again, if I go to the weekly time frame, basically, all I can think of is all of this buy side liquidity right here, the previous week high and this other week high, because there is no physical inefficiency right here that you can literally trade into. And if you go down to the daily time frame, there is none. The one that we have before, we have traded into it right here. So, and this is new week, so we have nothing else to trade it rather than to seek the highs, this high and this high. So I just need, yes, who is?
Sorry for cutting you short. That's sorry. I just want to confirm something. That means what price is doing now is that price is looking for liquidity, right? See, there's no efficiency.
Price is seeking liquidity at this point, right? The reason why, again, the candlesticks are telling you where price is going. Listen to what I said. Price is for you. First of all, you have to determine your direction. Then, after you determine your direction, now you are not looking for where price will likely get to in that direction. So if we are trading in, for example, if we are down, we are going down, like the candlestick has already told, like, okay, say we are going down right now, for example, right? Where are you going to take the trade to? That is the next point. You already know that price is going down, but where are we going exactly? You have to be specific. It's either liquidity or inefficiency. These are the two places we are going. Why do you always think that when I break everything down for you guys, like I said, price is only looking for, like, I mean, not looking for, like, this is what price is doing every day in the market. Seeking liquidity, seeking efficiency, right? So which means where there is liquidity, price will likely draw there. And where there is inefficiency, price will likely come there to offer efficiency. So you get a direction now. Your direction is basically where the market is going. But now the market is going here. Where exactly is the market going? It's either your inefficiency or your liquidity. Do you understand what I'm saying?
Yes, sir.
So these are the two things. You just have to, like I say, you already know what this market is doing constantly. The next thing is for you to know, okay, in fact, your direction, right? Once you figure out your direction, then you go down to the next time frame or something. So this will tell you now that where price may likely go is either liquidity or inefficiency. And you guys already know where liquidities lie in the market. You know what is inefficiency in the market, right? So those things are very important. Know the direction, and in that direction, know where the market is delivering to, whether to inefficiency or to liquidity. It's not just like your entry first. You have to know these two first, and your take profit is basically this liquidity area or your inefficiency, because now you know that price is going up, right? So where exactly is this price going to this upside? Where exactly is it going? It's either your inefficiency or your liquidity. Your entry comes next, like later or something. Now you already figure out the direction and where price is likely to reach out to. Now, the third thing is like, how am I going to enter? Where am I going to enter from? That is just the other things. When candles are resisting, failing to close above or below previous candles, these things are telling you a lot of story. But you might be surprised, like, okay, what about if the daily, for example, let me give you guys for example, if price is going up, right? Uh, Price is just going up. So which means I need to see candle closing above the next candle, right? And that is breaking of structure. Then if price candlestick fail to close above that next candle, right? You cannot just decide that price is turning around now. The reason why you cannot decide is because you already see in the higher time frame that price is coming towards this direction. For example, let me just use anywhere. Price is coming here, and you see price is going higher, breaking candlestick, breaking candlestick. But when it got here, it failed to break this candlestick. Usually, that is a sign that price wants to go down now, right? But it cannot just go down, because where this price is coming right here, price hasn't gotten there yet. This down move is just form of resting. It's resting or trying to take some liquidity, because probably there is not enough liquidity to push the market to this direction now. So this thing right here is just a minor, either rest, or we are looking for some kind of internal liquidity to continue the trend to this direction where the market is going. This is the only reason why you will see price fail to break or close above something. In that case, let me, for example, this one right here. This one right here. So, like I say, during the week, I already knew price is going higher, and the liquidity we are reaching for is this and this. For me, I know it's this one because this candle has already taken this. So we have this one right here. We know we are reaching for this liquidity. So now, looking at the candles, 1, 2, 3, 4, 5. For example, here, this close above this. This one failed. Why did this candle fail right here? Why did it fail? Does it mean that price wants to keep going down? No. It's just a pause. And what is this? A consolidation. You guys already know all of these candles. That's why I said I want to talk about the candles. These candles are telling you something. And you know, traditionally, when there is accumulation, the next phase is expansion. Anytime you see accumulation, the next phase is expansion. You guys already know all of this. You are not just putting it into work. We know when there is accumulation, which is fair value, the next phase is to expand, to distribute. Expansion, distribution, whatever. That is the next phase. Until we get to where we are going, any other kind of price action you are seeing is just form of rest or something. You know, maybe all of this candle, you might see a change of character or something, But this change of character is nothing. These are just liquidity taking, because if price will be going up like this and it take out this low, this is not a change of character, because this price is coming here. This is just liquidity taking and for more price to go higher. And when liquidity is usually taking like this, probably there is some kind of POI around this level that price came into to push the price higher now, because we have already taken liquidity from this low. Because this low, what is here? People buy from here to this up. And this below this low, there is liquidity. Do you guys understand what I'm saying?
Yes, sir.
So, for example, if you look at probably this accumulation phase, you can see there is a low, a high here, then price came down. We took out this low right here, into where? This inefficiency or this other block right here. Then what happened? Price move higher, then again consolidate, then move higher, And if you look at here, this is a low. Price took this low right here into where? This area. Then what happened? Price expand again. These are just accumulation. And when price is accumulation, we need distribution next. You just have to look where we are likely to get our distribution from. You see, in this lower time frame, the 1 hour, they are lows. You see, low was taken, but do you think it's a change of character? No, because this price have where it's going somewhere, and until we get there, any change of character, all these things, they are just manipulation. They are just liquidity taking for price to go where it's going to. That's why I told you, until we get to where we are going to, anything like that is just like a fake move. It's not a pure change of character or change the state of delivery or something. No. First of all, identify your direction from what? That higher time frame. Because that higher time frame will tell you what we are looking for. We are looking for higher time frame, either inefficiency or liquidity. So when you come down to the daily, let's say we are looking for weekly inefficiency or liquidity. Then the daily candles will now be telling you stories. When you see a fake story from the daily candle, whereby you haven't gotten to your weekly inefficiency or your weekly liquidity, that daily story is a fake. It's not like fake. It could be just a resting, or that information is like looking for kind of liquidity to push the market to that weekly inefficiency or weekly liquidity. Do you guys understand what I'm saying? Price doesn't just take liquidity random. It takes liquidity into a point of interest. And it's left for you to find out those points of interest depending on the time frame you are, something like this. And now I'm here just to teach you the guys like the candlestick reading, how you read the candlesticks, because they matters a lot. They are telling you story. And this candlestick is something that we've been talking about for like quite long time now. When there is a candlestick like this is indecision candles. And indecision, it's not just because it's just like they are making a decision or something. This is ranging. This is accumulation. And whenever there is accumulation, there is always expansion next. Distribution is next. Whenever you have accumulation, the next phase is expansion. Is there anybody that is not getting this?
I have a question, Andrew, but I'm trying to find the screenshot. Just if you give me a second. Sorry.
Again, I'm going to start again, right? The things you need to follow is one, identify the uh, the direction first. Then, when you identify the direction, look for two things: inefficiency or liquidity in that direction that price is likely to reach out to. So when you identify this area, if you go down to your lower time frame, you don't need to catch the whole range because the whole range is a week. You have Monday, Tuesday, Wednesday, Thursday, Friday. 5 days makes that weekly range. Do you need to trade all of these days? No. You can catch 1 or 2 days out of this range because you know where that range is going. You already know where that range is going. It's going for that liquidity or that inefficiency. Your lower time frame, they are just telling you a story, okay, where we are now and what we are doing now. We are going there, but the lower time frame is telling you where we are right now and what we are doing right now. Are we resting or are we, are we going still? It's either it's resting or is going still. That is when you decide to join if we are going, or you wait if we are resting until it showed you the sign that we want to move now.
Okay, Andrew, I put something in the chat. This is something I was trying to understand last time because you were talking about reading the candles, and I more so need help with this for like higher time frames. I understand that like if price wicks below, then there's going to be a reversal, but I didn't
So
understand.
is what you put here, he said, it's easy. This is what I'm saying right here. Candle close equals to continuation because they are telling you the story. Candle rejection equals to reversal, but not all. We have to, if it rejects, we have to at least reject from where?
Wait, can you say that again? I'm sorry, you said not all the time. I'm
Not
sorry,
all
I'm
the
just
time.
trying to.
Yes, not all the time. The reason why it's not all the time is simple, right? Because
So you're saying that if the candle wicks below, we're not going to always buy
no,
because
no. If it wicks below, are you guys here? Okay, yeah. If it wicks below, right? Are you listening?
yes, I'm listening
So
to you,
if it
Andrew.
wicks below, yes, and we haven't gotten to exactly where we are going, yes. Okay, this is a pure example. I have a clean example for you right here. Watch my chart. You see this green candle right here? Yes.
Yes.
Now, look at this first black candle. You see how it wicks under? We should see a reversal here. The reason why this candle didn't give you that setup for a reversal because we didn't get to where we were going. Look, this is where we were going. And do you know what is this? This is previous week low. This is our liquidity pool. Until we get here, any this information is a false information. What I just explained right now, and this is the
Yeah.
same candlestick you sent to me. Not all rejection is a reversal. We have to get to where we are going before that main reversal will happen. It wicks. Usually, once it wicks, you could find a reversal right here to trade. The reason why it didn't reverse because we didn't get to where we are going. This is the previous week low right here. Until we get there, before price will reverse. It's simple as that. Those candles are telling you information. That information, you have to work with it. Like I say, the distrib here is where we are coming. So even if price fail to close above this, all this green candle, it's just a fake. We are looking for internal liquidity to continue the price to where we are going. So if you will go to here, this is it. It wicks it. Remember, this is where we came to take the low. If you go to the 1 hour, for example, so when it wicks it, what? We have inefficiency here. So price came back to this inefficiency, now push down again. If we were going to continue from after wicking out, this is what price will do. We will break this structure, now come back and continue. We will not reach out to this place. But instead, we came to this inefficiency and pushed down price to what? To our main liquidity target, which means, what is this? Internal liquidity. What? Inefficiency. Doesn't, whatever it may be, it's just two things: inefficiency and your liquidity. Those are the only thing you need in this market. And the candlestick reading, know the range, that direction. You must know where we are going. And where are we going? We are going for that higher time frame liquidity or that higher time frame inefficiency. Those are the only two things.
Okay. Did you go over US 30? I'm sorry, I'm a little
No,
late.
no, no,
Did you
no.
already, can I share my chart? Well, I have US 30 and I have
The thing is that I
NOS.
don't trade US 30. So I'm just here to teach you guys. You can use this information however you want. I'm only doing analysis or just teaching you like what I trade. So if you want to share your chart here, but I'm telling you guys right now, it's the same information. You just have to sit down, work your way through with the pair you are trading, with the instruments you are trading. It's the same information.
Okay, no problem.
You want to share your chart, you can share, but we are just still in the middle of explaining this candlestick to you guys.
Okay, I'm sorry to interrupt. Continue. I'm listening. Thank you.
Yeah, I mean, I'm just answering the question, like the candlestick you sent in the chat,
So I have
so
a
that the
question.
rest of the people will understand. What, Jackson?
I have a question.
Okay, go on.
My question is, you're teaching us quite about candlesticks. So if you want to enter this pair and trade based on the candlesticks, can you do a top to down analysis on how you do that when you enter your chart?
Again.
I said my question is, you are teaching us how
Yeah,
to
yeah, yeah, yeah. I understand your question. Now,
okay, sir.
you are not entering from this weekly time frame, right? Which means you show up every day in the market. Is that not what you are doing?
Yeah.
Right. You can mark any of the day. It doesn't matter whether Monday, Tuesday, Wednesday, Thursday, and the Friday. It doesn't matter, right? Now, you looked at the day as it closes. This was Thursday, right? You look at the day as it closes. How does the day closes? I've told you guys every day. You show up every day. You look at the daily time frame. How did yesterday closes? That is how you will determine what today is going to do.
Mm.
It's simple as that. Then you see price closes like this. What is this? Indecision. What is
Yeah.
indecision? Accumulation. You know
Listen.
this price is going higher.
Yeah.
Which
Listen.
means for you, you are looking for buys. Nothing concerns you, concerns sales in this market, because that is your buyers. You are looking for buyers.
Yeah.
So what do? You go down. Where is this thing I mark? Okay, this is it. Mhm. This is it. So I don't need to go to the 4 hour, but you can go. It doesn't matter. So here, this is it. This is what?
Accumulation.
The candle accumulation. And what
This
happened
supposed
here?
to
This is where when the price open. You see
yeah.
how it opens here? Now, first of all, this is a bullish candle, right? Which
Yeah.
means it broke structures, right?
Yeah.
But again, remember, I've, I'm telling you guys this thing every day again. Before price, we do what? Sell. We need to take out liquidity from the downside and continue going higher, right?
Yeah.
So again, this is Friday. We break this structure, Asia session. This is now London session right here. Here. What
Yeah.
happens? This becomes accumulation, which is Asia,
Yeah.
right?
The manipulation.
You see this
Yeah.
low was taken. And again, not just that low. I always tell you guys, candlesticks, this low was taken as well. So
Was
which
taken
means
to.
you are now looking for expansion to the upside from any of this level because this low has been broken to the low, like has been taken, even this low has been taken. You are now looking for
Also.
what are you looking for? Change the state of delivery, whatever. That is what you are looking for now to take your trade because you already know the direction. Why, like, like maybe confusing yourself or something. And this comes down to individual. How do you enter your trade? Because I have multiple ways of entering my trade. I've showed you change the state of delivery, fair value gap, inverse fair value gap. Those are what I use to enter my trade because I already know what the market is doing, what it's going to do. We are
Mm.
going higher. So I'm only looking for these three things to occur. I don't need them to occur at the same time. Any of these can occur, then I'm going to take my trade. Any of these can occur, I'm going to take my trade. So here we have the change in state of delivery. This kind of broke above. We have one, we tap in, then this is the goal. But do you need to wait for that side? No. Now, what do we have? We have inefficiency right here, which is break inverse fair value gap. This candle close above it. You see, this candle came back into this candle and go higher. These are what you are looking for. These are what you are looking for. This is your choice. I have three things I'm looking at. I don't need them to occur at the same time. Any of them occur in my direction, which I know price has already, I have checked the boss, liquidity. In fact, this is a break of structure, by the way. Then price came back to sweep liquidity a lot here. Then I'm looking for buyers, right? And price giving me the reason to buy. So why am I not going to buy? What I didn't trade the rest of the week because I was busy. This is what I trade on Friday. I told you guys I trade on Friday. This is what I traded on Friday. Do I need to trade every day? No. I'm only looking for 2 or 3 good trades in a week. But if I'm busy, I couldn't take the rest. Yeah, one trade is okay for me that ways.
Okay, sir. My next question is, as a trader, like you say you don't trade every day. So as a trader, will you advise us to, actually wait for your setup, like before you trade? Like, I'm not gonna put like when you come into the charts,
Mhm.
if you don't see your setup and you're seeing something that looks like your setup and it's not.
Okay, listen. Do you have a setup? Do you know what you are looking for? For example,
Yeah, kind of, because
okay, if you know what you are looking for and you know what you saw, it's not what you usually take as trade, right? But
yeah.
is it in your bias, like in your direction? That is the thing now. Is it in your direction?
Yes, in my direction.
Let's
Yeah.
say from higher time frame or anything, he said market is bullish. But what you usually take, like your entry or something, didn't present itself. But you see something, I don't know, maybe it looks familiar or it looks similar or whatever, or you have seen it before. But towards your direction, then it's fine. But usually, for discipline reasons, that is why you have an edge, rules, because that is not what you see every day for you to take your trade. So do you need to take it? I don't know for you. That is why I told you I'm looking for inverse fair value gap, or change the state of delivery, right?
Yeah.
So I don't need all of them to occur at once, which means one of them can only occur. I'm good. In as far as my direction. So this is how it works. It's not like I'm going to advise you or something. That is a choice. And that is, it's not random. For you to see that thing, you probably might be seeing it before.
Mm. Yeah.
It's not random. Whatever you see, it's just because you are not paying attention. That is basically why. Because there is, you know, time again, all of this session, it occur in that session which you want to trade or something, yeah, you can take it. But usually that is not what you see or that is not your setup. But yeah, you can take it if you know, okay, it's fine for you to take it like that or something.
Okay, sir. Thank you very much, sir.
You are welcome, sir. So any other
Andrew,
question? Yeah.
okay, I just want to say something to see if I get the message. I think you're just using the candles to know the direction, right? And you're focusing basically on like the weekly previous candle as your major kind of liquidity point.
Bro, like it's simple like that. What is this market looking for?
Liquidity, it
And
is
what
Liquidity is
is if this market
efficient
is looking for liquidity, where does your liquidity lies?
at previous candle high.
swing point highs and lows.
Easy. So what do you think a monthly candle, previous monthly candle high and low, what is it? It's a high. It's a high. When you go down to a daily or weekly time frame, it's a structural high. And the same, if you marked out a previous week high or low, when you go down to the lower time frame, daily or 4 hour, it's a structural swing point. It's not about you are using your candle. Because if you are looking at a 4 hour or 1 hour, it is a structure for you. It's a high, right? Why are you confusing yourself or using different terminology when you know that this high, it's a bigger time frame candle high or low? Market
So should
structure,
I?
candlesticks are market structure. Why are we going to deceive ourselves or like confuse ourselves for? Candlesticks are market structure. It's because you can see them in the bigger time frame monthly candle, you cannot read them or something. They are market structure. There is no difference. That is why once I see a candlestick, it doesn't matter from which time frame. I know what it is in the lower time frame in that ways. What kind of structure it is in the lower time frame. Those you have,
Okay.
if you don't know candle self, by the way, you don't know market structure. I think I asked somebody here, and maybe it's you or something, or Dunami, I don't know.
It's me.
Because
It's me.
candlesticks are market structure. Do you know your market structure? You think it's to go to 1 hour time frame and be looking at all of this? No. Candlesticks are market structure. Do you understand?
Yes, sir.
So it's like that. Reading the market structure, reading the candlesticks is the same. But candlesticks, highs and lows, are liquidity. Because if you go down to the lower time frame, they become highs and lows that you understand as a market structure. Do you know how many highs and lows you will find in the lower time frame? This is a high as well. But in the higher time frame, as a candlestick, you already know there is no internal high that is going to deceive you because you marked out that high from a higher time frame candle. So all those internal highs is nothing to you. You will follow the higher time frame candle. That is where the direction is, like the liquidity or the inefficiency lies.
Hmm.
Do you understand? Don't
Yes, sir.
be confused or deceived by anything. Candlesticks, read them. Once you understand them, that's all. They are your market structure. They are your liquidity pools, highs and lows. Just within those candles, you can look for what? The inefficiencies inside. Because those are the only two things the market is doing: seeking liquidity, seeking efficiency. That's it. If it's not going for liquidity, it's going to rebalance an imbalance. That's just the only two things. Or do you guys see what other things the market is doing? If it's not liquidity and inefficiency, do you guys see what else the market is doing? I'm asking. So that is a no.
The market's looking to draw on liquidity where the big institutions have placed their orders. So to fill those orders first, so they can either go on a buy or a sell. So if price needs to buy, then they need to sell their position so they can get a better offer and then pick up buyers at that price because it's a better price to buy. Then why would you buy at the high and then, for a higher price? You want to buy at a lower price
That is what I'm saying.
so you can profit when you sell at a higher position. So yeah, for me on this daily, I see price going in, taking that high and then selling, then buying back up. But it'll be an internal sell. I don't think it will sweep those lows.
I know where price is going. We haven't even get there, but I'm just teaching, like saying,
Oh, right,
telling you
okay.
guys that
But is
apart
that the
from
right
liquidity
explanation?
and inefficiency,
Is that the right explanation? I don't know.
no, it's okay. We're talking about liquidity, and you are also talking about liquidity, which is right. I'm just saying, apart from liquidity and inefficiency, do you guys know any other thing that the market is doing?
Oh, seeking to rebalance.
That is inefficiency.
Oh.
Rebalance is offering efficiency, right? Yeah. So these are the only two things the market is doing. Once you understand these two things, that's all. And these two things, okay, if we are going up, we are going for either one of them, either to rebalance or to seek liquidity above high, right? If we are going down, either to rebalance or to seek liquidity below lows. That is the only two things it's going to do. It's just for you to follow the market to that down until we get there, or follow the market to that up until we get there. That is the only two things you need, like the market is doing constantly. Any other, I don't know, learnings you guys are learning, forget about it. The thing is is in front of you like this. Just put in work. You have the whole information. The market is always seeking liquidity and seeking efficiency. Figure out which liquidity are we going for, down or up. And how do you know? The candlesticks. That is how you know.
So that's what I guess I have a question about, because you just said that, how do we know the direction that the market is gonna, like, what liquidity sweep is it going for, whether it's going for the high or the low of the week or the day, right?
And yes, what time frame do
And
you
you're
start from if you want to make your analysis?
well,
4 hour,
usually I
right?
start from
Yeah.
the 4 hour. Yes,
Right.
sir. Yes.
So do you know when you are trading from the 4 hour, right? Let me just make it simple. Do you know when you are trading from the 4 hour? You basically trade it like the daily range, right? This is the daily range. But that daily range, it could be a ranging market or an expansion market, right? So which means
Yes, sir.
if price is going to be bullish for that day, right? you probably will catch a buy, right? And close somewhere else or something. I'm not your where we are not swing traders anyway, and close somewhere else or anyway, right? But
Yes, sir.
there is a reason why that price go higher, right? It's reaching for a higher time frame liquidity. But if you understand that, yes, this is the higher time frame liquidity we are reaching for, so you have more confidence on that trade. Even it doesn't matter if it retraces back to your entry, you can even add more position because you have already know the higher time frame direction.
Yes, sir.
That is just what I'm trying to tell you guys. Yes, you know by looking at the higher time frame. Price is not just going to go straight to your direction, straight like this. No, this is how price is going to work to that direction, basically. Do you understand what I'm saying? So these they are just pullbacks. What are they doing? They are looking for internal liquidity to fuel this move to the upside.
Yes, sir.
You just have to figure out the direction first and where we are going. How do you know the candlesticks? Like I say, you start from whether the monthly or the weekly, depending on the pair you are trading. Because every pair has a different price action. Look at the weekly time frame on gold. This is how it looks. Look at the monthly time frame on gold. This is how it looks. You think the monthly time frame of GU is like that? No. But the candles will tell you where we are going next, right? The candles will tell you where we are
Yes.
going next. This is what I'm telling you. And if you know that we are going so place next, then you are fully comfortable. So now, I mean, I just jump from go to GU, but I'm just going to give example on this, right? Now, let's look at the candlesticks, right? You see how this black candle, right, close below this green candle. This tells us that price is going to sell. But where are we selling to? Now is the question. This is inefficiency. This is inefficiency. So which means it's either we are coming into inefficiency or liquidity. And what is liquidity? Highs and lows, right? These are liquidity. Like this candle high is liquidity. The candle low is liquidity. This candle low is liquidity. The candle high is liquidity. So if this is last month, I will say now November, because new month is going to open now, right? Now, there is something, looking at this price action right here, especially right here. So I don't want to go more detail about this so much, but yeah, looking at this price action right here, we have this month, last month, high and low. We've taken the low, right? Now we have a range. What is that range? From this low, high, and there is inefficiency within that range. So which means, where is the closest point of interest? Is this inefficiency, right? From here to here is nothing anyway. It's like 45 pips, right? But that is the closest point of interest. What is this market doing? Seeking inefficiency and liquidity. But the closest point of interest, or one of these, is the inefficiency right here, which means price can just come here, balance, and keep going down. And what happened after that? Price did take out previous month high, like this. So if we rebalance this inefficiency, of course, what did we do? We took out previous month high, and we can decide to come for previous month low. What is this? Liquidity taken from the buy side, rebalance this inefficiency, the liquidity is coming, price is coming to take the liquidity from the downside. But how would you know? The weekly time frames will now tell you. Once the weekly time frame give you that indication that price is coming down, trust me, this is your next liquidity pool. So which means you have a chance of riding this price down to this low by the weekly time frame telling you that we are going down. This is how you catch that bigger move, because the weekly time frame has already told you that, oh yeah, we are going down or we are going higher. But in this case, I mean, I'm just focusing from the monthly time frame right now because we haven't getting the first week of the new month. That's how we're going to know how the rest of the month is going to be, So basically, but looking at the previous month, which we just ended, I mean today or whatever, said that price is going higher. And if price is going higher, we have the previous month high right here. Maybe that is where price is going to, because previous, like the weekly time frame. Anyway, again, Naima, you see how this week failed to close below this candle? It tells us that price is going higher.
I thought the week did close. Didn't the week break?
This
It
one
closed
here,
below.
you can see this one here. It failed to close
Yes.
below. It tells us that the next week we are going high. What did I even, when I entered this, I told you guys that we didn't have meeting, but I traded on Friday because I know that week, which is last week, both GU and gold is going to go higher because of this simple thing. So it just gives me a bigger range to, from the daily, I can start anticipating, okay, where I'm going to take my trade from, basically. The range, you get it from the monthly or the weekly. And how the weekly closes, we just tell you that, okay, now we are about to start going up or down. And once you know that we are about to start going up or down, you are not just targeting just 1 hour candle, 2 hour candle. It's a whole range. The next liquidity pool is what you are targeting. The next liquidity pool is what you are targeting. Not just one individual thing now. The same thing you can use to trade in the 4 hour, in the 1 hour. Because the higher time frame told you we are going higher. So you come into the 4 hour or 1 hour, these are like, I don't know how to even say it right now. Like, it's just easy thing for you to catch a trade from the 1 hour or 4 hour without getting caught, and like making it easier for you. It's just simple, because the higher time frame has already tell you that, hey, this is where we are going. This 4 hour, 1 hour, it's just for you to like ride on with the trend until we get to that higher time frame liquidity pool. That is where we are going, the higher time frame liquidity pool. Until we get there, these lower time frames is where you just use to catch the trade along. Your discount. Do you guys even like sometimes just this information, if I say price is seeking liquidity, seeking efficiency, do you guys even process this information to make like you, so that you guys will understand this thing, especially?
Yes, I
Because
understand what you're
if
saying.
price is seeking liquidity, seeking efficiency, right? It does it in all time frame, basically. But if you can know like the higher time frame that we are seeking liquidity or inefficiency, it just gives you a long range, probably for the whole week to trade or 2 weeks to trade, until we get to that inefficiency in the higher time frame or that liquidity in the higher time frame. Price is not coming down or it's not going up, depending on the trend, until we get there. If we are coming down, we are only taking internal liquidity to continue that trend to where we are going, whether the up or down, depending on the trend. We are delivering price to that higher time frame, liquidity or inefficiency. Do you understand?
Yes, sir, I understand.
Any question, you guys? Maybe many of you feel like your entry is your problem. It's not your entry. Because this entry, we spoke about it every time. Even the one you have or like it works. These are the thing that is confusing you guys. Knowing that direction and knowing where exactly that trend will end. These are the things that is confusing you guys. Not your entry. People, strategy, it's not your strategy, it's not your it's how you look at the market. Because first of all, you need to know which liquidity pool or which inefficiency we are targeting in the bigger time frame. Once you know it, so you know, okay, that means we are going to this place. If price give me some fake move, it's just a fake move. Until we get to that bigger time frame area, any move is a fake move. That bigger time frame direction is what you will be aiming for.
I think
Okay,
Okay,
so
I have one more
Andrew, you're saying
question.
like
Oh, go ahead. Sorry.
because this was our next draw on liquidity, this thing that looked like shift here, that looked like a shift here was just like liquidity grab for price to keep going. And we shouldn't change by our buyers because the bigger picture tells us that
You
this is
see,
the next draw
this
on
one right here,
liquidity. Not
yes,
yeah,
very easy.
yeah.
You know,
And
this
even on
is this is a change, market structure shift or break of structure, and this is a
yeah,
fake. It's a fake one. This is just liquidity because
yes, sir.
the higher time frame liquidity pool is up.
Okay. And I can even see that even these previous days were like weak, but it did not still sell because it was just like fake
It's a,
previous.
this is what I'm saying. You see how this candle failed to close above? It's fake. On a normal day, when price do like this, you know it's about to reverse.
Yeah.
So until we get to where we are going, every other thing you see, it's just even giving you more opportunity. That is what it's doing. Because if it's going to keep on swelling up, you're not going to get in. These are just giving you opportunity because you have already know the direction now. These are your opportunity for you to like make use of the market, like add orders to your positions or something. These are the opportunity.
I think Sir Andrew I still need to do more on this candlestick, understanding it fully because I think I get the
Look,
message, just
look,
that
look.
it will
If you understand structure, right? Yes. If you understand structure, right? This is why I'm telling you guys about candlestick. If you understand structure, this is a structure now because from your understanding, you will think this is a break of structure to the downside. Price is only coming up and continue going down, right? But if you knew from the candlestick perspective, you will know that this is not price is not going down. is going up. That is why I'm telling you guys, if you read the candlestick, way better because the candlestick itself is structure. Because if you go down to the lower time frame, that's where you see structure, right? But these candlesticks are the main structure. Those are the things you need to be looking at. I'm having headache. Jesus. So, yeah. Rose,
Would you say
Andrew,
this?
you said now you go send me the feel for.
sorry, I barely hear you. I don't know what is wrong with my laptop volume.
Eh? You don't deal with me for some while now. You suppose don't they get something from this thing.
I know.
Leandra, you have a question?
Yes. And from the 1st of December, the federal FOMC, the Fed said they're going to begin quantitative
Easy.
easing. So
Yeah.
that means that more liquidity is going to be injected into
Yeah.
the
I
markets.
mean, they've been doing
So
it secretly, by the way. If you don't know.
I know, I'm just saying, like, be careful, like, if you're going in for a sell, because there's going to be a lot of liquidity injected into the market. So it's this. I'm just looking at silver, and it's already taken the highs. Those double top highs compared to gold. Gold hasn't taken the all-time high yet, like another all-time high.
I mean, we are going there that way. What do you think? You think
It just reminded me to say that there's quantitative tightening starting the 1st of December, which is Monday. So yeah, just be aware that
it's a lot of opportunity in this market.
and if they lower the interest rates on the 10th of December, then that's even more opportunity for people to put money into the market, isn't it? So yeah, just things to keep in mind.
So yeah, any other question? Naima, you want to share your chart?
I think she just left.
Is it? Okay.
I just saw her leave.
Okay.
But just
Won't you
quickly,
drop? Okay.
can you look at US 30 a sec on the monthly? Because this looks like a doji.
What do you want to see, US 30?
No, this looks like a doji. Oh, I normally go on Awanda, but yeah, the Awanda
Me,
chart.
I'm not sure if price is going to sell, but we
I,
have.
Leandra, I'm sorry. My Zoom got disconnected. Could you repeat what you just said? And I said that you're going over US 30. Man, I missed.
I just said there's quantitative easing starting. The Fed's going to start quantitative easing starting the 1st of December, and then
Did you say quantitative easing?
if the Fed lowers the interest rate on the 10th of December, that means that there's going to be even more opportunities for big hedge funds to inject money into the markets.
So you think we're gonna have the Santa rally starting already?
Pardon? The summer rally?
No, the Santa rally where price just has a surge. Is that what you're saying?
I'm
You
not.
know the Santa rally that happens?
I'm just saying that there's going to be liquidity in the markets, but judging by the economy, it could go either way. I don't know. I'm just following what Price is saying. I'm just going to follow what Price is saying. To be fair, there could be, a surge in the markets, but just be careful of corrections.
I mean, if you know what you are trading, so you should be good, Like
Hmm.
that's the only thing I'm going to say. If you know what you are trading, you should be good. But yeah, I mean, US 30 is eventually going for this high. So
Hi, exactly. That's what I was thinking.
Yeah, I have those part. I have that marked up, and then I also have the 4 hour um FEG. But I know that would probably be like a minor pullback if it even stops there. So that
mm,
I'm not banking on that. I would have to see a real reversal. So
mhm.
I'm seeing a definite pullback, and then possibly
I'm
see a
hoping we don't
high
go
being
to the
taken.
all-time highs again. Huh? I'm sorry, Leandra, go ahead.
No, it's okay. Don't worry.
No, I interrupted you, please. I want to hear what you're saying.
No, I was just saying, I definitely see it pulling back and then taking that high that you've marked up because it's a double top, so there's liquidity resting above there.
Yeah. I hope that I definitely do see us taking that, but I do hope that, the market kind of gives us a break because I know for me, like it's not the easiest thing to trade at the all-time high. It's easier for me when there's structure uh to look at because you just never know when price is just gonna fall out the sky.
That's where you got to get in with the pullbacks.
Follow the bell,
Yeah,
don't
I
get the
mean that's
pullback.
why I like wait till 10 o'clock to trade.
Mm.
Mm-hmm. Mm-hmm.
And
That I
just
mean, I'll trade the 4 a.m. I mean the 10 a.m. candle. Like I'll wait for 9:30, I mean 9:30 Eastern time to kind of pass,
mm,
and then I'll just wait until 10 o'clock because I hadn't been very consistent doing like work like trading at like 9:30 or 9:45. So like this past week, past 7 days, I just been trading at 10 and I've been able to be profitable. So I'm gonna stick with that.
that's good.
I mean, not that I've never, not that I've never been profitable at 9:30 or 9:45, but I'm just trying to develop consistency.
Hmm. So you trade at 9:30?
No, not anymore. I mean, sometimes like if price is at my near my AOI, then yes, but usually like my consistency will come around like the 9:50, 9:45 macro, or I'll just wait till 10 o'clock
Okay.
Eastern time. You trade London, Leandra? Maybe she doesn't hear me. If you're talking, you're on mute, so I can't hear you.
Sorry, I wasn't talking. You asked if I trade in London. No, I don't trade London. I trade New York.
Okay. Oh, but you get on like the 30-second and the 15-second. Yeah, I don't trade that. That's aggressive.
Yeah. It's not aggressive if you know your entries.
Yeah, usually like for me it's like the 5 or sometimes I'm trying to get better with like trading on the 1 minute, right? But when price slows down, then I can like and price gives like it shows its hand what it wants to do, then sometimes I'll get in on the 1 minute. But it just
So you wait for the
depends.
5 minute signal.
Yeah, like I wait for a change of character, or like Andrew says, a change in state of delivery.
Just on the 5 minute.
Yeah, but my
I would like
entries are
GU
on
to come
higher
here
time frames.
and for a buy either here or here. Oh, So upside is good.
So I'll look for confirmation on multiple time frames to get into a spot. And then I'm looking for a change of character on lower time frames.
But yeah,
Because just because price gets there doesn't mean that it's, you know, going to react in that area.
hmm
But
you see, Andrew, you see price respecting this level and then
This
aiming
is
higher.
GU, you know.
Yeah,
Yeah, I
I
think
know.
so.
You don't see it going a bit lower
I'm not sure.
because isn't it got it didn't have a weekly bullish order block? Yeah, there
I
where you've got
don't.
that. We've just
This is
marked up.
like daily
Where
fair
you
value gap. I saw
where you
this, but
marked up
I
just
don't care
there.
about the what
Where
other.
you marked up
I don't.
just
This is
that
where I
brown
want
box.
price to come to
One second,
respect.
Andrew. 1 second. When you pull up when you pulled up this chart earlier, and
Mm.
I saw those I forgot what it's called now. Equilibrium. I can't remember. No, it's not equilibrium. But those wicks, I thought price is definitely coming in between those wicks there.
These ones.
Yeah, the grey box that you just marked up.
This one.
Yeah, if
This
it's
is like
got
a daily inefficiency, right?
yeah inefficiency. Yeah.
But I'm not sure. No.
Mm.
Yeah, because for sure, price needs like we need higher prices, you know. But yeah, it could happen. It could come here, but to be honest with you, I would like to see price respect this area. So
hmm
again, it will be as if like the one we did right here. We've already said we want to keep going higher, but I
Yeah.
would also like price to come for this low, then into this area, then we can see higher prices. Just like I think price did something like that on what? Was he
That
on
could
gold?
take 2 days.
No. This is daily time frame.
I know. I can see that taking like 2 to 3 days to do that.
I
Like
I,
do a
mean,
doji,
I don't know.
take that low, do a doji, and then the next candle will be a bullish candle.
It
Do
could
you know
be
what I mean?
today. It could just be like take that low, then later in London or New York, we start delivering to the upside, you know. It could happen.
I don't trade GU anymore, but it doesn't really pairs don't move as fast as indices, so I'm just lowering my expectations for this quick movement.
Hmm. So yeah, I need to talk to my girl right now. So
Okay, go on then.
if you guys have questions or something.
No, thank you so much. It's been very helpful.
Mhm.
yes, thank you very much, Andrew.
Yeah, we will see Wednesday.
Yes.
Yeah,
Oh, okay.
yeah,
Thank you, Andrew.
All
yes,
right.
Thank
sir.
you.
All right.
Bye.
Yeah, yeah.
Bye, you guys.
Bye.